Profiting in choppy markets with mean reversion strategies for Bitcoin, ETH, and even stocks like Nvda. Hey guys, it's Keith Allen, back after a near miss on Hurricane Milton for us here in South Florida. So good for us. Thoughts and prayers to everybody else in the path. A lot of people certainly had catastrophic damage. There was loss of life. It's just, it ain't a good scene for the rest of the state. So I really am sending a heartfelt prayer to everybody who is affected by that. Most of us in the state know somebody who is in that area. In any case, wanted to take some time today and take a look at what's happening here in the market and share with you something I touched on yesterday, and that's how to profit in this kind of price action using mean reversion. We touched on that a little bit yesterday. I'll go a little bit more in depth today. So in addition to the analysis, you're going to get a bit of a tutorial out of this. So if you're into that, glad to have you with me. Live chat is open, by the way, if you want to answer any or ask any questions or chime in, share some insight. Always enjoy that. And also a reminder, if you like the streams, do me a favor and smash all the buttons. Make sure you especially hit the subscribe button, the little bell up there on YouTube, so you never miss any of the live streams, and share a comment. Love engaging with the comments. Looks like somebody might be chiming in already. Thanks, AR. Yeah, all good for us. To be honest with you, we were just taking precautions here in South Florida, Miami. I'm on the East Coast, southeastern coast of the state, and really we were spared. We had some outer bands, very, very mild in terms of what we got versus what we were expected. But having been through hurricanes here in the state of Florida my entire life, I know that these things can be unpredictable towards the end. So we just, we were prepared no matter what came our way. Glad we fared well. Hope a lot of people also did better than they expected as well along the way. So glad to be here, guys, and thanks again for the ongoing support. So let's chime in. What happened today, right? We got red candles happening across the board, not just in crypto, but really TradFi as well. Let's go ahead and start sharing charts, and we can talk about what maybe triggered this action and how to deal with it, right? So as you can see here, this is my indexes chart. We've got Bitcoin up top. We've got the S&P. We got the Dow Jones. We got the NASDAQ, and we got red, and red. And so obviously we had a catalyst today, and that catalyst came in the form of today's economic numbers. Oh, how come I have all these different ones in here now? Let me just clean this up a little bit for us and make it easier to see what we're referring to. Core inflation data came in slightly hotter than expected. And the inflation rate, same set of circumstances year over year. Everything came in a little hotter than expected pretty much. And so especially initial jobless claims, those came in hot. So remember all the people who were talking about, the numbers are skewed. Well, then the numbers might be skewed. We don't know. We don't know for sure, but there was a lot of speculation that how should I say, the political party currently in power might be manipulating the numbers to have a favorable outcome for the election. Well, these numbers aren't so favorable, so you can go ahead and burn that theory. Whatever the case may be, I think this is just a short-term and knee-jerk reaction to what is, what we're seeing in the market. And we have another set of data coming out tomorrow, PPI coming out tomorrow, and this could very well, I think we're in that good news equals good news cycle, bad news equals bad news. And so, which was very different from what we've seen through a lot of the year, which was kind of mixed. But I truly think that we are in a good news equals good news cycle. So if we have good news tomorrow, then today's losses might be regained. And likewise, if we have another day of bad news, well, we might see this downward pressure continue, likely so, until we have another catalyst coming our way. Hopefully a positive one that sends things back up. But today we're going to start on the Bitcoin chart as we typically do. So let's start here. And as you can see, we've had this breakdown through the moving averages, right? And this started quite some time ago, end of last month. We lost that 200-day, we had only regained it just before the end of the month. Had a bit of a fake out here. Things broke down here on the daily. We lost the 200, we lost the 100, the 20, the 200, the 21, the 100, and now the 50. We've lost both of these in one full swoop here today. Not good, right? This is why yesterday I said I want to zoom out a little bit, at least to the weekly, and this really was defining the range for me. The 21-week moving average up here around 62.5, and the 50-week moving average down here around 56.6, 56.5ish, somewhere in that range. And you can see this is kind of, the sweet spot is my old red box here that's been here since the 2021 mid-cycle top. So all these things come into play for sure. In terms of targets that I'm looking at now, as we see this pullback, and as I identified yesterday, I felt like we're in a extended chop. And I've been saying that since we've been in this chop, and expected it to continue probably through the election and maybe even through the end of the year. And so, that's how I'm trading this at this point. In terms of how low I think we can go, sure, my invalidators, I guess, in terms of this, the bullishness of the market, my macro view would be down here on this trend line, which has been running since the FTX crash. But we have a few other things here that I'm focused on. You can see this white line here, which was our double bottom. We can see that better here on the daily chart, I think, where we double bottomed in this range right here. And yes, we did have a wick lower, so this is important, okay? And we'll talk about this wick, which would be a lower low if we indeed go that deep. But I have reason to believe we might not go below this double bottom area, which was about 53.9K. And I'll tell you why. You can see I have my trend precognition indicators up here. This is the A2 algo throwing arrows, and this is the A1 algo throwing dots here. And you can see trending down on the daily. Yep, no surprise, that's playing out here. We're also trending down on the weekly. No surprise. We have back-to-back, or how should I say, confluent signals here on the weekly time frame, and that too seems to be playing out. But if we go to the monthly, that tells a different story. No signals up here on the A2 algo, but the A1 is giving us a tentative long signal here, meaning not necessarily that we're going to go to a new high, but that we might that we're not likely to go below this last candle's low, which keeps us in this double bottom range. And I mean, a triple bottom to me would be a stronger place to bounce, right? So in terms of the macro, I want to see higher lows, right? We have a higher low. We have a higher low. We have our first higher high. And now, can we continue to do this? So, and by continue to do this, I mean build higher lows and higher highs, and ultimately go after this one up here at 72, and then go after all-time high. So what I'm doing in this instance, and you're going to see this, similarly across other assets. Before I do that, let's look at ETH real quick. Not something I do frequently in this stream, but let's do it. On ETH, you can see that it's kind of similar here, where we have on the weekly still downtrending, and on the monthly, what do we have on the monthly? I haven't even looked at this. So the monthly does have a signal from the A2 algo, and we looks like very close to throwing one on the A1 algo. When this orange A1 slope line crosses this blue dash line, we'll get a new signal. And so similar set of circumstances here, where double bottom territory, and we're very close to the trend line. All of this comes into play. Look at the 50-month moving average laying right across this trend line as well. So this would be, in my opinion, likely the technical level that I would look for. We're at about 2200 as a good technical target for ETH here. And obviously, if things break down, then things could go much lower. Now I want to show you what I've been using, and this is something that again I touched on yesterday, but I've been using this since before we launched the company Material Indicators, and it has been um, my most profitable strategy really with anything. And you can use this for different strategies. This is the MTF Mean Reversion Indicator. And basically, for those who aren't familiar with how mean reversion works, price likes to spring back to mean, and that works from below mean and as well as above mean. So anytime price moves above mean, it likes to come back. Anytime it moves below mean, it likes to come back. And so what I have this set to right here is a deviation of 3% from mean, white being the mean average line here. And so every asset trades a little bit differently, right? Bitcoin is less volatile than a lot of altcoins, and crypto is less volatile than TradFi in most cases. So you can adjust this indicator any way that you like. I tend to trade it in a grid. And the strategy that I use is I put smaller money on the lower deviations and bigger money on the higher deviations, and I dollar cost average my way into positions. So to find your range without getting too complicated here, and if I lose you, feel free to chime in with a comment, and I'll respond to you. So as you can see up here, here's a 1% deviation, and you can see many more signals coming in at 1% than come in at 3%. And a 2% deviation, 3%, and I could go all the way to, I can go as high as I want. I could set these deviations to 100 if I wanted to. Not going to get any signals there, but the point is you can set the deviation to the asset. And by setting up a grid like this, you can find the range that an asset has been trading in. Now, I trade this on 1 minute candles. That's what this indicator is designed for. But I'll use 3 minute to kind of scroll through time a little bit faster. And we can see that Bitcoin, you get a lot of signals here at that 1% deviation, but we also have more drawdown. So is that really the best setting? If you want to do quick scalps, maybe so, small money scalps and DCA, a bunch of them, then that can be effective. But for what I'm doing, I don't want to be quite that aggressive. So I've pared it back a bit. Now, if you want to just turn capital, then that's a good approach to go with lower deviations. Helps you get lower trading fees, right? The more volume you generate on the exchange, the better your fee structure is. So that's one way to do that. And you could do it with relatively small money and a higher frequency of trades, and then just keep recycling it, right? So I'm going to take off these higher deviations because it's making the chart very, very busy here. And we could see, so this light blue is 1%, the purple is 2%, and the darker blue is 3% deviation. And so, if you want to be a little more sparingly, at 3%, I'm not getting many signals at all. And so I would put bigger money on that at that deviation than I have on, say, 1%. 1% is a little bit aggressive for me in this environment. So let's say, and to simplify things, let's just show 1. Okay. So at 2% deviation, I'm getting signals that I'm dollar cost averaging. So I'm not going all in on one signal. I'm putting relatively small money in and dollar cost averaging my way in, and then going with a static TP on my way out. Now you can adjust your take profits to whatever you want. And so here you can see that we've made, this was a 5% move. And as price came back down, we came very close to getting a new signal here just a few minutes ago. It didn't hit yet, right? So maybe, and as you can see, price starting to recoil again. So maybe, just maybe, we're not quite there yet. So in terms of target wise, I could build a compelling argument for obviously this double bottom that I talked about, but maybe higher, maybe in this 58K range, right? We have so much confluence down at this level, 59K, 58. Let's see what we get on the weekly. And in case you hadn't noticed, I'm kind of doing this live in the hot seat for you. So yeah, I could build a compelling argument for anything in this red box. To be honest with you, anything down to any of these lines. But this is a reason that I like using this mean reversion indicators because it's taking the guesswork out for me. I set my range and it's taking the guesswork out. Now we can validate things a little bit more if we have some confluence with the technicals, right? And if we have confluence with liquidity. And so we do have some decent bid liquidity at 58K, not a ton, but some. We also see that on FireCharts that there's no real buying happening here. So that leads me to believe that this dip isn't done dipping yet. And so it could go further. And if we zoom out, we can look and see if we have even any more deep concentrations of bid liquidity that might be viable targets as well, or indicate that targets are strengthening. And so at the moment, this 58K range has a decent amount of bid liquidity in it, and obviously secondary support down to 55K, and then a gap down to that past that double bottom range. So I don't want to see that. I don't personally want to see that breached at the moment. So this range is viable for sure, but again, using the MTF mean reversion Indy uh, helps me take the guesswork out. Could I have bought here? Yes. Could I have done it manually? Yes. But I send signals to my bot on TradingView, so I just take the guesswork and the fact that I don't have the chance to sit here and push buttons all day as much as I would love to be able to do that. It's easier to program the bot, set the alerts for the signals, and let the signals do the work for me. So that's basically what I'm doing now. If we want to look at another asset, we talked about ETH, and we can now look at ETH USD as well on Coinbase. This works obviously on any exchange. It works on any asset you can use you use on TradingView. And so you see it did pick up a entry here at the 2% deviation as well here on ETH at what 2350, in that 2350 range. So different ways to use this, right? If you're going to use it for a quick scalp strategy, then the lower deviations are okay, but you want low TPs as well, right? So this move right here went to what 2.3, 2.75%. Pretty quickly, right? So, I usually trade them at 2.5%. Sometimes, if I'm being conservative, 1.25%, but 2.5% usually gets the job done pretty quick for what I'm trying to do in a scalping strategy. Now, if you want to go with a more more of a buy the dip for accumulation strategy, and you want deeper deviations to do that, and maybe you're going to take less positions but go bigger, then at that point, sure, go with a deeper deviation. And let's see let's see what ETH has been doing at deeper deviations. Has it been doing much in the past few weeks? I don't trade it very often, so I'm not totally in tune with what ETH price action has been as much as I am with Bitcoin. It's been pretty much. It's also been pretty tight in the range, to be honest with you. So the deeper deviation isn't going to produce much at this point, but you never know when that's coming. So I still keep those. I still keep those bots running, and I still have those alerts set for those deeper deviations, so that when they do come, I can hit them. But my scalping bot is running for the assets that I want to trade, based on the range that I'm trading. Based on the range that price is trading in at any given time. So here at looks like 3% is really about as deep as it's gone lately. And so if we compare the number of signals that we get at 3% versus what we get at say 2%, you can see, right? Lower deviations is going to give you more signals. It's also going to give you more drawdown. So you have to be mindful of that. That's why it's always good to get a feel for what the range is before you set your deviations. All of these ultimately would have, let's see, would they all have become profitable? Let's see, this one was right up here, 25. This one was a while ago, right? This one was actually just at the beginning of the month. So have we reclaimed that level? No. But on a dollar cost averaging strategy, which is what I do, especially on the lower deviations, if you DCA'd your way all the way down to these, and say your average price is somewhere in here in the 2300 range, then you're good. You're good. You're golden. You're printing green P&L. What's AR gotta say? Oh, back to the back to the hurricane conversation. Lived through Fran in Wilmington, North Carolina. Yeah, I remember that one too. And back to trading. October 23 to March 24 looks like what we get post halving cycle. After the cycle, either the top is in or we're getting one hell of a run. To be honest, don't know which one, but I'm leaning one way. Well, which way are you leaning, bro? I'm leaning towards the fact that I think that that the macro is still intact, and that we are going to likely see these bigger moves after the first of the year. So that's the way I'm trading it. Otherwise, I would have unloaded everything already and just gone mostly to USDT or USDC, so that I can just take advantage of opportunities. So, hello, Mrs. Allie. Nice to have you here. Nice to have a female crypto trader in the mix. If you are indeed a Mrs., you never know on these things, right? So, anyways, as back to what I'm showing you here, 2% versus 3% deviation, right? More signals versus less drawdown, and so for me, the 3% is a better move, and I still expect that we're likely, not done with this. Whether that happens today or tomorrow, I don't think we're done with this range anytime soon. I think we're going to chop through this range through the election, most likely. Now, this indicator, the MTF Mean Reversion Indicator, does work. Like I said, any asset you can trade on TradingView, including stocks. So let's look at one that is always in the news these days, Nvidia, and see how you would have done if you were using this on Nvidia and what range it's been trading in. So looks like we get a few signals at that 3% deviation. You get obviously more at 2%. I would keep this one also on that 3% deviation. I'm more interested in the quality. Now, you can see drawdown here as well, right? So this depends on how you're trading this, right? If you're scalping it quick, there's your 3%. So you can make money very quickly, I will say in a relatively short amount of time, by taking these quick scalps. Or you can DCA your way down and look for that bigger move that's going to get you more upside. And obviously, if we had done that, and let's say if we took this, I'm just going to like ballpark it, right? If we had dollar cost average all of these, took it somewhere like this, and then went to where we are now, that would have been a hell of a trade. 25% since when did the first signal come? August 28th. Yeah, I don't know anybody that would have a problem with that. So there's the overview there on the MTF Mean Reversion Indicator. You want more info on that, you can head over to materialindicators.com. I will, of course, have a link in the description that you can follow. Let's see. We got more from AR. AR says, I'm the same for the most part in terms of his outlook for Bitcoin, I'm assuming. Let's see. As you, I still believe we need a catalyst like ETFs cost. Just don't see people looking at a calendar only to buy or sell a heap of Bitcoin. Yeah, I don't think it's a calendar event. I think it's a catalyst or some clarity in the market. And I think that there's a lot of, how should I say, uncertainty around this election. Now, I don't think that beyond despite what a lot of people think, I honestly don't think it matters who, uh, in terms of crypto prices. I don't think it matters who wins the election. I do think that there will be a knee jerk reaction to whomever wins the election. But we could have some post election drama depending on the outcome. Well, either way, there's going to be some post election drama. So we might have some volatility around that. But I think ultimately, as we get into, once we get past the first of the year, things start to settle down a little bit. I think that the market goes back to doing what it does best. And we're going to see the ebb and flow between now and then. So yeah, a catalyst could do it for sure, right? Whether that catalyst is economic, whether that catalyst is domestically political, whether it's geopolitical, like say an end to the war in the Middle East, that would be a good thing, right? Or an end to the war in Ukraine, that would be a good thing, right? Or any number of things that could trigger the next leg up. Likewise, any of those things could trigger a black swan. So you've got to be prepared for that. But I think that in the event that does happen, and I think it's important to at least identify what are potential targets for those things. I think that, in terms of Bitcoin, for example, like I said at the beginning of this, I'm looking at trend lines here, and the trend is still intact. And until the trend is no longer intact, then I remain macro bullish. Now, if we lose that, let's say we have a black swan event that really takes things down, then we have this 200 week moving average as kind of a last line of defense before just really losing everything and going back to that I don't know, maybe the 25K range. So those are all plausible things that could happen, but we'll see. AR's got another one. Let's see, AR. What's the question? You don't think Donald Trump would cause a pump in KH? You don't. Like I said, I think there would be some short-term volatility. So I do think there would be some short-term volatility, but I think it will pass. And so I'm not going to get into my. You guys probably already know my political stance, but I'm not going to get into that on this stream because it's just too much of an annoying topic that makes my blood boil. So I'm not going to go into that, but I do think that we will have, regardless of who wins, there's going to be a knee-jerk reaction to it. But like I said, once we get into mid first quarter of 2025, I think that that comes and goes, and we're back on to whatever the normal trajectory is for the market, barring other events that could trigger something. What else you got? I think there's too much leverage in the market. Watch the heat map on CoinGlass and adjust. Watch them liquidate longs and shorts. Yeah, well, that's basically the game, right? You use CoinGlass. I like the guys at Kingfisher, and I will tell you that the game has pretty much been squeeze shorts, go back and liquidate leverage longs. And so, that's basically the game that we're in right now. We just went down and took out a bunch of leverage longs in the past few hours. And so now look what's next. Can we make it back up to this, 60, 62.2, maybe even 63 and maybe even 64K? Possibly. Might take a few days to do that, might take a week to do that. But I think that as long as this dynamic goes on, then this is kind of the game that's always going to be played in this market. You're over leveraged, you're a target. It's basically how it works. With that, I think I can probably wrap this one up, guys. I'll leave you with one more look at FireCharts to see if we got any liquidity movement that is exciting or noteworthy. Obviously, we have some resistance coming in here at the 62 range, which, so here's how I see this, by the way, is when we have something like this happening, this is obviously suppressing price, but it's also, how should I say, luring in some shorts because people don't think that we're ever going to go back up here. And I'm here to tell you that we are, or at least I believe that we are. I do think that price will eventually come back to this level, and we'll just keep playing this game until we break this range. Could we go down as far as 50K? Absolutely, we can. Do I want to see it happen? Not necessarily, but as long as we protect this lower low, then what was that at? This was at 49.5 on this exchange. Might be somewhere close to that, closer to 49 on whatever exchange you're on. But as long as we don't go lower than this, I'm not so concerned. Now, if we start printing lower lows, then guess what? This comes right into this trend line. So going down to test this and coming off this trend line, that would be a bold move, in my opinion, and a fantastic place to start the next leg up. So we'll have to just keep watching. In the meantime, how do you trade and make money when it's unpredictable like this? When it's not, pardon the term, up only? Well, I showed you. We use the MTF Mean Reversion Indicator, and this thing works very, very well on any asset you can trade on TradingView. I'm partial to this one, and so that's what I'm doing. You do you, I do me. Hopefully, I'm giving you some things to think about, giving you some insight to help you navigate things as we move forward through this chop. And of course, we'll be watching tomorrow to see what the economic numbers do and see if that gives the market a reason to rally again. I'll be honest with you, my hopes aren't high for it. I would not be surprised if we see a not a great report tomorrow, and this trend continues a little bit until we find some support and go back and run the range again. But every time we run this range, guess what? That's an opportunity to make money in both directions. So with that, as Alexander puts it, still stacking sats. That's the game, my friends. That's the game. Gonna leave it right there. Have yourselves a fantastic remainder of the week. It's coming to an end pretty soon. And as always, trade safe, my friends.